In today's fast-paced financial market, trading bots have become a popular tool for both novice and experienced traders. The automated system executes trade on your behalf, following a set of predefined rules or algorithms. For beginners, understanding and using trading bots can seem daunting, but with the right approach, they can become a powerful asset in your trading tool. What are trading bots? Trading bots are software programs that automatically execute trade based on specific parameters. They analyze market data, track price movements, and execute buy or sell orders according to the strategies they have been programmed with. The primary advantage of using a bot is its ability to operate 24 by 7 without the emotional biases that often affect human traders. Why use a trading bot? Automation. Trading bots handle the grunt work, allowing you to focus on strategy rather than execution. Speed. Bots can execute trades faster than any human could, which is crucial in the fast moving world of trading. Discipline. By sticking to preset rules, bots eliminate emotional decision making, which can often lead to poor trading choices. How you can get started. Choose a platform. Start by selecting a trading platform that supports bots such as Binance, Kraken, or CoinPro, or anything which you prefer. Many platforms offer built-in bots or integration with third-party bots. Select a bot. There are numerous bots available, ranging from free open source options to premium services. Research different bots to find one that suits your trading style and goals. Backtest your strategy. Before going live, use historical data to test your bot strategy. This helps you understand how the bot would have performed under different market conditions. Set your parameters. Define the rules your bot will follow, such as when to buy, when to sell, and how much capital to allocate per trade. Monitor performance. Even though bots are automated, it's essential to regularly check on their performance and make adjustments as necessary. There are a lot of risk and considerations. So, the first thing is market volatility. Trading bots operate based on historical data and algorithms, but they can't predict the future. In highly volatile markets, they may not perform as expected. Over optimization. Beginners might fall into the trap of over optimizing their bot for past performance that can lead to poor results in live trading. And in terms of security, ensure that the platform and bot you choose have strong security measures. Never share your API keys with untrusted resources. Practical example. Let's consider a simple strategy. A moving average crossover. In the strategy, the bot buys when a short term moving average crosses above a long term moving average and sells when it crosses below. This basic approach can be a great starting point for beginners, providing a balance between risk and reward. In conclusion, trading bots offer a unique opportunity for beginners to participate in the financial markets with a level of automation and efficiency that wasn't possible before. However, it is important to approach them with caution, thoroughly test your strategies, and stay informed about market conditions with the time and experience. Trading bots can become a valuable part of your trading arsenal.